Hello and welcome everyone. We'll wait a couple of minutes for more people to join and then we'll start the PMS live stream. All right, we've hit 11 o'clock, so let's get started on the PMS live stream. In today's video, uh, we have very interesting updates coming from the PMS side. We'll take you through how the performance has been. We'll talk to you about our outlook on the markets, and then I'll give you a brief overview about the PMS as well, right? So let us get started. And before we begin, thanks a lot for everybody who's joining in on a Sunday morning. It means a lot to us. All right. So, this is like a 4 year update on the PMS. We sort of launched this PMS at a very correct time, right? I think right when the market was in favor of equity investing, and we are getting very good response from our customers as well as from the market. So let's go over what's happening. Before we begin, you guys know me. We've been on the small case platform for a while. Recently, 4 months ago, we started the PMS, which right now manages more than 50 crores in assets and has delivered excellent performance similar to our small cases. So what Wright research is based on is a lot of quantitative topics, right? So number one focus area for Wright research is factor investing, right? So our whole intention of doing this is trying to understand, what drives the market, right? And all the things that drive the market is something that we call factors, right? So let's say the valuation that the company has and how that governs the prices is called the value factor. How the growth of the company governs the performance is the growth factor, and then you have momentum factor, which is how the price trends influence the performance of a company. Obviously, with right research, there's a lot of focus on momentum investing. In most of our strategy, momentum tends to get a high allocation. So, momentum investing is extremely important for us. And then we do use a lot of artificial intelligence in the investing process, right? So, we try to use AI to forecast how the risk will be. We use identify regimes with AI, and we tactically allocate in different market regimes. And then in some of our strategies, we in fact do some hedging as well. So we have three funds in the PMS, right? Three schemes. The first scheme is the one which has the highest number of investors, right? This is the right factor fund. This is a moderate risk strategy where, again, we follow a quantitative approach. We are investing into multiple factors. The idea is look at what factors are working in the market, look at the risk in the market, and allocate accordingly. So talking about the performance, we've just completed 4 months, and we've touched around 30 in terms of performance, and this is at a 16% outperformance over the market index. Our factor hedged, is the factor based fund with a higher allocation to the momentum strategy, but it also uses hedging wherever there is a high market risk. So this one again has been live for 4 months, has outperformed the market, and has a good potential going forward, not just in risky times but also in robust bull market as well. Then we have our alpha portfolio, which is a concentrated momentum strategy. So only 10 stocks, very high momentum, right? Similar to the alpha prime that people have seen on small case. This one, is the best performing strategy in the last month. It has given more than 30% returns in 4 months. And in fact, if you guys watch PMS Bazaar, which ranks the performance of PMSs across India, our fresh new alpha fund, in fact, ranked number 3 on the among all the PMSs on PMS Bazaar in terms of performance, right? So that has been amazing. So this is the three PMSs we have. We also have a debt scheme. So, if you wanted a slightly lower allocation, we can give you a mix of one of these schemes and the debt scheme, right? Now let's go over, before we dig deeper into the PMS portfolios, let's talk about the markets, right? So what's happening in the markets? Right now, we're seeing a lot of FII buying happening in the India market. And this FII buying is a little bit strange because typically, if you look at the pattern, December is not the month where a lot of FIIs end up buying in India. Whereas in this year, FIIs are buying a lot in the India market. If you look at the growth that India is seeing, you would see that India has given a 7% growth, which is higher than projections, right? So why are FIIs buying into the market? The growth opportunity that India shows is extremely attractive for them. If you look at the valuation of Indian equities, the valuations have corrected a bit during the last few months. So right now the valuations have become attractive, especially for the large cap stocks and a weaker Indian rupee, right? So whenever the rupee is weaker, the foreign investors make more on their investment because they're investing in the US dollar, right? So the weakening rupee is attractive for foreign investors. Then the monetary policy outlook has been favorable. The rates have been on a pause for a while, and people expect next year we could in fact see some rate cuts happening in India. If rate cuts happen, that's a big boost for the industry. Liquidity comes into the system, and there are more opportunities to invest into the riskier assets like equities. Again, on the technical front, the technicals have been strong, and there has been good support there, and people do expect the rally to continue. Some people anticipate short term, there might be a slight correction or slight sideways market, but long term, or in the next year or so, everybody is extremely positive. And this happened especially after the political victory that the ruling party had in the state elections. People expect that the next year election that's coming in 6 months will be in favor of the ruling party. And what that would mean is that the existing policies which are in favor of the economic reforms in the country will continue. And people find that extremely attractive. India would be stable politically, and the growth agenda will continue. Now, so that's a lot of positives, right, about the country, which is why FI are pumping in money. And now let's talk about what happened in the US Fed announcement last week. So last week the US Fed Jerome Powell came in, and he has kept the rate steady, but he has in fact said there is a probability of a rate cut as per the consensus in the US Fed. So next year we could see rate cuts happening in the US economy. So let's look at why people expect the US Fed to cut rates. Number one is that the economic data coming out of the US has been very strong. Inflation has cooled down quite a bit. It is near the target that the Fed had set, and that is quite favorable for the country. The job growth is quite robust. The industry's growth is robust. So I think things are working in favor of the US economy there. uh, People expect, so if you look at this chart on your screen, what you will see is that this shows the number of people who are forecasting uh, what rate. So you will see that in September, more people are forecasting a higher rate compared to December, right? Similarly, in every period, 2024, what is the rates people are expecting? So more people are expecting lower rates compared to what they were expecting in September. Similarly, in every period, right? So people across the board have, the probability of a rate cut, if you look at this chart in 2024, has become much more higher, right? So the expectation that the market has of a rate of the rates being cut is quite strong in the next year. uh, there is a lot of it's not just about the economic signals and expectations. The economy right now in the US is saying that if rates are hiked any further, there could be recessionary concerns. If you take away more liquidity from the system, there could be concerns on liquidity. And that's why people are expecting the Fed to not raise any further. Secondly, the global uncertainty, right? Wherever there is a lot of stuff happening in the global market that puts pressure on the economy, and people expect the Fed to not escalate the situation and not raise any rates any further, and in fact ease them a little bit. So, why is this interesting for us? Why are we talking about rate cuts in the US? It is because, see, the rates in the US govern the liquidity cycle across the world, right? So, if the rates in the US are cut, then there's a lot of money, there's the liquidity in the US increases whenever the fund managers in the global economy have money to spend. They look at slightly higher risk assets like Indian equities. We talked about why Indian equities are important, and if in fact the rates are cut, Indian equities could end up getting a lot of inflow, right? So that's extremely positive, and that's why we think it's a very interesting time. So we get a question again and again from our investors that market is at a high, should we invest? Market is at a high, should we invest? But in fact, the market has touched a high so many times in the future, in the past, right? So that's why the market went from 7,000 during COVID to more than 21,000 right now. So that is because the market breaks the all-time high all the time, right? And market breaks the all-time high when there are things that work in favor of the market, right? So the Fed rate, the strength of the economy are all of these positive signals that make us extremely positive and not scared of about any all-time highs being hit. So having talked about that, let me give you a brief overview of what our PMS is about, right? So first thing to understand in today's session is what is the philosophy of factor investing that we follow, right? So we talk a lot about factor investing, right? We do factor investing. Factor investing is extremely important. It's something that can drive a lot of outperformance. But what is factor investing? So, as factor investors, what we are trying to do is identify what are all the factors that influence the market. So, obviously momentum influences the market, obviously value influences the market, but what are the other things? Market is extremely noisy, thousands of stocks, millions of investors, right? So much noise, and it couldn't be just one thing that influences the market. There are a number of things that break down the market's return. And so, counter to the traditional approach where people think that, okay, today my portfolio is doing well because I picked these stocks, right? And that's a little bit of a naive understanding of the market, because your portfolio is doing well because of its exposure to these very, very quantifiable factors, right? It is doing well because momentum is strong, it is doing well because growth is strong, or are better in your portfolio. So understanding this dynamics is extremely important, and that's what factor investing lets us do. Now, again, we do approach the market in totally data driven fashion, right? So why is, again, data driven investing important or interesting? Because the data driven investing philosophy takes away the subjective bias that a portfolio manager might have. I will not even talk about anybody else but about myself. If I uh, pick a stock on my own, I would be a little bit biased towards it. I would be like, I picked it, I bought it, I'm going to not sell it, right? This is my buy. So, I would expect it to go up even though it's giving very clear signals. Whereas when we approach it in a systematic fashion, then we get these signals coming out of a system which is unbiased. When the system says, it has reached a peak, it is correcting now, or whatever, something has happened in the stock, then it is time to sell. So that removes all the biases away from the strategy. In fact, we even use a large data set, right? So when we are doing investing using data, then there's no constraint on the number of data points that you can look at. The technology has evolved, with the cloud servers, it's a lot of compute space that is available, and we are able to process large amount of data to build these portfolios. The speed with which we approach these portfolios is quite fast. We are able to churn this data at a very, very fast pace. And then the risk management, right? So any system, so with Wright Research, see what the big focus is. that today creating a portfolio for today, right? If you didn't know, if you didn't care about the past, is easier, right? You can look at the stocks that are there. This is public available information. You can in fact go to screeners and do the filtration, etc., and the computation, right? But before we take out any strategy to the clients, we try to validate that thesis across the historical period in different scenarios, right? And for us to be able to do that, we need the best data set for the history as well, right? We need, if I'm looking at this strategy 5 years ago, then I should know what are the top stocks in 5 years ago and what is the exact data 5 years ago. So that is a big focus. That is where we spend a lot of time in making sure the data quality is good. And then we take our strategy across different scenarios in the history and make sure that it performs well in different risk scenarios, right? And that's how we optimize it. So because we have optimized the risk across scenarios, that's why we are able to give you a better risk management. And the last thing is that the performance that the strategy has ends up being a little bit more consistent in expectations, right? So if you ask me today that, let's say what happens if the market goes this way or that way, I will not be scared because the system knows that if the market scenario shifts, what to do. And that gives me a stronger sense or a stronger expectation on what to expect from the market. Now, having talked about it, let's quickly try to dig a little deeper into what are the factors that are out there in the market and what are the stocks that will give you a sense on, what are these factors talking about, right? So, the first factor that we in fact look at is the momentum factor, right? The momentum factor bets on the price trend. Whatever is going up will continue to go up. Whatever is going down will continue to go down. And it's not as simple as that. Obviously, there are various sort of signals and indicators that we experiment with and try to find out the best way to invest in momentum. But broadly, the thesis is that anything that has picked up pace will continue to do that because a lot of buyers have jumped into it, and that trend has been formed. So if you were to look at momentum stocks right now, I think the BSE stock or the PFC stock will be some of the high momentum stocks that you might have looked at. Second factor that we look at is valuation, right? What valuation means is how the value of the company, right? Fundamental value of the company is comparing to the price. So one stock might have, a value of 100 but a price of 200, and another stock will have a value of 100 but a price of 500, right? So the second stock is obviously overvalued, whereas the first stock is undervalued. So you would you would expect the equilibrium to be formed, right? This stock to be which has a lot of value to reach its potential, and that's why people invest into undervalued stocks. So if you were to filter undervalued stocks right now, some of the stocks that will come up in your screeners are Just Dial and Angel One. Another important factor that Wright Research looks at is the earning momentum. What that means is that analysts across India are rating, stocks based on their expectations. Every day you see that, Jeffries has released, that the price target is this, or yeah, let's say Motilal Oswal has given this price target on a particular stock. They think that the EPS is going to rise by X percent, Y%, etc. Right? So whenever these guys increase their EPS expectations, like you might have seen when Mama Earth IPO came, right? It was correcting after it came out in the market, but the moment Jeffries came up with a high price target, the stock sort of started going up, right? It hit a upper circuit, right? So these the expectation of these large research teams are extremely important, and that is what we include in our earning momentum strategy. We see how they are revising the stock expectation upwards or downwards. So based on earning expectation right now, a couple of stocks that might come into your screener might be Crisil and BLS, right? Now, the fourth factor that we look at is quality, right? So, quality means, we look at how profitable a company is, how stable is its profitability, how stable are the various metrics, that will deliver strong returns into the future, right? And that hint at the quality of this company and their, you know, uh, ability to consistently generate profit. So this is another metric. Obviously, a lot of different ratios are looked at and patterns are discovered here. But if you were to filter out a few quality stocks right now, DMart and BPCL might come up in your screen. Now, the fifth type of strategy that we look at is the growth strategy, which is you're looking at the historical growth patterns, which stock has given strong historical growth, which stock has given strong earning growth, and you might see Zomato and MRPL come in your filter there. Then lastly, there is a low volatility strategy. We're looking at stocks that have low volatility, that have low risk. We expect, people expect that stocks that are doing are much more stable than the overall market will be attractive in the long term. So you will see Gillette and PNG sort of come in your screener there. So, in fact, we are not constrained to those six factors. We look at a bunch of different factors. So, from macroeconomics, right? How is the exposure to North America governing stocks? How is the exposure to inflation governing stocks performance? Similarly, how is the liquidity, right? How is the amount of risk that the stock has, amount of liquidity that the stock has will impact the performance. So we look at a bunch of different factors. We in fact are exploring how sentiment, right, all this news data and all these stories that are coming in, how they impact the market, and how does the text data that's coming out, how can it tell us about the corporate governance issues and a number of other issues that can be spotted and be used in the model. So bunch of a number of factors are looked at, and finally we select our set of factors that we want to work with. Obviously, all of these factors, are selected such that they perform better than the market in the long term. Right, in the long term, all of the factors do better than the market, but they don't work all the time. That's the thesis, right? So momentum investing is perfect. It does the best most of the times, right? But there are scenarios where momentum might not do well. And in that scenario, you might have to allocate maybe to value, maybe to low volatility. And that is what we work with. So, what we say is that the market goes through two distinct phases. So, if you look at this chart from 2000 onwards, you would see that it is mostly green, it is mostly favorable, but there are distinct periods where there is a red zone, where there is a bear market, right? And what is working in the bull market is distinctly different from what is working in the bear market, right? And that is what we want to recognize. What are the things that are working best in the bull market? What are the things that will best work in the bear market? Now, how we approach is that what we do is we try to constrain our risk. We understand that taking a lot of risk in a bull market is good, right? It will give you good returns. But in a bear market, you have to reduce the risk. So in a bull market, end up taking a lot of risk. You might end up having a lot of allocation to momentum, but in a bear market, you would have to reduce your risk so that uh, you know slightly safer factors start getting more allocation into this strategy. So the PMS strategy that Wright Research offers, all of them pick up stocks from the top 500 universe, right? Only 500 stocks, only the top 500 stocks, and there's a reason for it, right? Number one, that we are relying on data, right? So when you go to very, very small companies, let's say micro caps, the data is not reliable. The companies who are publishing the data, sometimes there is not a lot of clarity on the data. Plus, uh, investing with that data is not the best way when you're looking at micro caps. Micro cap requires a lot of on the ground effort, which is why our universe is top 500 universe. We select 20 to 25 stocks from this universe to include in the strategy. We rebalance on a monthly basis. So this is a PMS, right? So unlike a small case strategy, we do not send you an update on the first of the month, and thousands of people get it. So there has to be a schedule and something that people can follow along. Here, we get to take the decision whenever we have to, because we have power of attorney on the accounts. We can take the decision. We don't have to check with the clients, right? So with this, obviously we trade once a month, but it's not set on any particular time of the month, right? On We can end up rebalancing the portfolio uh, before the end of the month also. and this gives us a lot of flexibility. So you might see there's execution preference. Stocks might be changed in the PMS before they happen at other places. You might see risk management being very very fast here, right? So if there are risk scenarios, we can execute then and there, right? We can execute in the live market. Now, talking about how the sector allocation looks like, we try to diversify our portfolios very well, right? Equity investing has a lot of potential, but you have to follow certain rules. Diversification has to be there to reduce your risk. So, no sector gets more than 20% allocation, and no stocks get more than 10% allocation. So having talked about that, let's talk about our best performing, top ranked fund in the PMS Bazaar, which was Alpha Fund. So Alpha Fund, in fact, gave a very strong performance in the last month, right? Last month, the performance of the Alpha Fund was, in fact, uh, you know, more than 15%, and it ranked in the number three slot among all the PMSs. And this has been one of the most attractive funds that people have been subscribing to. It has corrected, a little, not corrected, but it has lagged a little bit in the December month. But again, in the last week, the performance has been very strong. And obviously, there is a little bit of bias towards large caps right now with FII's money coming in, and we could see that rebalance happen with this portfolio. Talking about our other strategy, the factor fund, right? So this one again, did not rank in the top three, but I think December is turning out to be really good for it. December, May, this fund is touching close to 8-9% in performance, and the aggregate returns is the beginning is also touching 30% for this portfolio. So again, an excellent performance by this strategy. Now let's talk about the back test for a little bit. So with the factor fund, we expect it to give close to more than a 35% CAGR if we look at last 10 years of data, right? Last 10 years have had some very strong bull markets. Obviously, right now we have a strong bull market, but 2020, 2013, 14, 17, 18, all of these markets have been quite strong. And there have been some very strong markets that have supported this strategy historically. That's why we expect a very strong returns coming out of it. The alpha strategy, on the other hand, is a slightly high risk strategy, and there we expect even higher return, but with a slightly higher risk, right? So that is something to understand. That alpha strategy, in fact, is a high risk, high return strategy. So those numbers will like look a little bit insane with a 50% CAGR or something like that, which talking in a back test is not the best, right? When you are showing backtested performance, if somebody came to me and said, "Okay, I have a backtest that is giving me 60%," then I would say, what are you talking about, right? So, those numbers look very good. I'm sure that if we are able to do this consistently over the market, then, we can be very confident in when we talk about it. But definitely, we expect very strong returns from the alpha strategy, but at a very high risk, right? So within the strategy, what happens is that the allocation of different factor moves with the market. Obviously, uh, momentum gets a high allocation across the board, and you see debt and gold also get allocation in high risk markets. And when there's a very high risk, when there's a scenario which we have never seen before, which happens all the time, we would deallocate to cash as well. In terms of risk, right, we have seen a couple of risk scenarios in the last 4 years, 2020, 2021, 22. In both of the scenarios, the strategy does better than the market, and strategy does better than the market in terms of risk in most of the years. Obviously, let's look at the performance, right? Performance in 1 year can be variable. 1 year could give you 60, 70, 80% return, and another year could give you 10% return or less than that, right? So what we believe is that 1 year very difficult to predict, right? You don't know what might happen in 1 year. Markets, like we do all know, are extremely noisy. But if you look at it from a long-term horizon, if I'm looking at it from a 3 year to a 5 year horizon, then you would see that in any 3 to 5 year horizon, the strategy would give you a strong return. Here it is giving more than 25% CAGR. So always allocate to any equity strategy for the long term. In the long term only, you will get the real performance coming out of the strategy. So, having talked about that, let's quickly wrap it up by talking about the turnover, right? Whenever we trade, there's a cost. Even if you trade with a discount broker, you do pay the transaction taxes to the exchange, right? And whenever there are momentum players, a momentum investor who is trading on a monthly basis would be doing better than a momentum investor who is trading on a weekly basis, right? Because they're paying a lower cost and they're letting the stock stay there for the long term. So our team at Wright Research puts a lot of focus in trying to minimize the turnover, make sure the turnover remains low, right? And that is again a big focus. And we've talked about the expected drawdowns, expected returns, and the holding period, like we saw in a last live stream, that we hold stocks around 25% stocks for the long term, more than a year, but rest of them are held for smaller periods. So that's pretty much about the strategy. Right Factor Fund right now has a lot of allocation, high allocation to small cap, but it in fact has gone lower, right? It used to be higher and now it has reduced, and it's quite diversified. You have, in the finance basket, you do have your capital market stocks, you have your power finance stock, insurance stock, etc. And you have, a number of different sectors from defense, railways, pharmaceuticals, FMCG, banking, etc. So it's a very healthy mix within this strategy. And with that, I will wrap up this presentation and let's go over to the audience Q&A. All right, so I have Siddharth here with me who's going to
Yes.
pick up the questions.
Sure. Good morning, everybody, and thank you for joining. Thank you for the presentation as well, Sonam. So we have, a bunch of questions that the people from the live session are pouring in. What I've done is I've segregated a couple of questions which are from the small case side, but first we'll look at the PMS question specifically, right?
Mhm.
So the first question is, how will you manage small cap downfall, which is inevitable at some point in time, right?
Right. Definitely it is inevitable, right? The market goes through cycles, right? So if the small caps in fact correct, right? See, typically it doesn't happen in a day, right? It is not like, today the small cap decline 30%. It doesn't happen like that. The
Right.
market gives you signals, right? It gives you signals that, suddenly small caps start lagging the large caps for a little bit, and then eventually they might correct. So I think it's a gradual process, and that's what we've seen historically, right? That's not my belief. It is something that we've seen historically. The market gives you a fair bit of signals before a large event happens, and if small caps are not giving that return, then you would see gradually small caps getting reduced. So in the similar fashion, like if you look at last year, we had more large and mid caps, right? But since March, we've been adding a lot of small caps, right? And similarly, they would go away when there's a time.
I think yes, that is absolutely fair, right? So we have a very interesting question from Kushal Loya. He's asking, how can we know the average P of any fund?
See, average P of any fund, very easy. You can just look at what are the stocks there, right? And create a weighted average of the P ratio, right? Obviously, we haven't disclosed all the stocks in the PMS, right?
Right,
But I think that's the way to do it.
right, perfect. So the next question is from Manoj. He's asking, how will you manage liquidity in the portfolio stocks if FIIs start selling?
Right. See, FIIs, when they start selling, the larger impact ends up happening in the large caps, right? So last few months, in fact, right, if you see, Nifty has been flattish, right? So if you look at the Nifty chart, you would see that Nifty 50 was in fact in the last 6 months quite flat from September to the beginning of December, right? But all of these portfolios, all of these small cap portfolios have continued to do well, right? Small and mid cap
Mhm.
have continued to do well, right? With active portfolios. So FIIs typically impact the large caps more, I would say, and
Right,
they definitely would boil down to small caps. But like I said, that the strategy will build upon that signal and deallocate.
right, absolutely. So Bharat Sharma is asking, what is the definition of an excellent rate of return?
So if I've used that term somewhere, then we have to look at it. But see, excellent rate of returns is 4 months 30% is excellent, right? What else do you want? But yeah, obviously you have to, if somebody is outperforming the market by a margin, right? If the market gives you, let's say, a 15% return in 10 years, and a strategy is able to give you a 25, 30, 35, whatever, that's amazing, right? That's what I would call excellent.
Right, right. One of our existing investors, Muzamil, on the PMS side, is asking, does the WFF PMS have trailing stops to lock in many of the gains and reduce overall risk?
Yeah, Muzamil, so I think, see, we let the winners stay while they have that potential, and we don't put a stop loss as such, right? But what ends up happening is, see, I was showing, we analyzed the momentum portfolio performance last week, right? And I was showing you that, around 15 stocks, in fact, have given more than 100% returns, right, in that portfolio. But if you look at the worst performers, so obviously 40% or 35-40% of stocks have ended up negative. But among those stocks, the maximum loss that any stock has seen is roughly around 20-25%, right? So we end up selling the losers faster than we hold the winners, right? So that happens organically within the strategy, right? We don't put like a specific stop loss, but organically the losers or any stock that is not showing that potential goes out from the strategy.
Right. Perfect. Another question from an existing PMS investor, Mr. Sanjay Kumar, is asking, will you go into cash during market fall in any of the strategies, specifically in factor fund?
Yes, we will go into cash when, like I said, then the market will show you a scenario that you have never seen many times, right? Like when the Ukraine war happened, when the rates were being hiked higher and higher, people saw that you've never seen such high rates in the US in the last 30 years, right? So this was something that many of us hadn't seen in our lifetimes, right? So such scenarios come, and what happens in such a scenario is that market shows a sharp correction, right? In a 2 week, let's say market corrects by 10%. That's bad, right? So in such a scenario, we deallocate, right? We take out 10% cash away from the strategy, move that into a liquid instrument, and keep on doing that as the correction keeps on going. So in 2020, when the market corrected due to COVID, we in fact, went almost, we were allocated almost 40 odd percent, right? Even before the crash, we were deallocated, and again we deallocated. So that is very strongly built in.
Right, right. I think yes, a lot of investors also have this question, right? And they're asking multiple times that is it the right time to invest more capital to double down on investments?
No, so I totally understand the worry that people have, Siddharth, that
Mhm.
market is at 21,500. It is at
Right,
a high, right? But
right.
so that's why we covered our outlook of the market in the previous slides, right? We are
Right.
I mean, people are extremely positive about the current market because of a number of reasons, right? The growth being strong, the stability being there, and FII is pumping
Mhm.
in money, and then the prospect of a rate cut in the US. But despite that, we have to know that there are a lot of uncertainties that are still there in the market, right? There is a
Mhm.
scope for economic decline in the developed regions, right? There could be
Right.
a fear there, right? There could be an escalation of commodity prices, right? There could be
Mhm.
something happening in China. So there are worries that definitely are there. But on a broader term, India has sort of decoupled a little bit from the global market. Indian market tend to be strong despite what happens in the market, and the growth is looking strong. So I think the
Right.
outlook right now is positive. Obviously, the risks remain, and we have strategies that will mitigate that risk. But yes, I think right now it's a good time to invest. I won't say double down and do anything like that, but uh, it's a very good time to be in equities.
Absolutely. There is a question from Mr. Ravi. He's asking, are we launching any new PMS strategies in the future and any new small cases as well? Is there any plans for that?
So we don't have any specific plans right now. We keep on researching and analyzing a lot of data and trying to come up with what else interesting things can be
Right.
looked at. Me and Akashdeep from our quant research team, we've been playing around with a lot of data recently, and we might if we see something interesting, right, which might be interesting to our users, which could add value to people's portfolio, we might bring it
Mhm.
on. But right now, I
Right.
think we have a lot of strategies out there, right? So
Right.
small case front, momentum, alpha, new India, balance, all of these strategies are excellent. And if we add too many, then people will come and say, you have too many strategies. How do I choose? Right? Yeah.
Yes, correct, correct. Absolutely. Mr. Ram Narayanan, an existing PMS investor of us, has a question. He's asking how risky for a senior citizen is it to, when he plans to move into alpha, small case or PMS?
See, the alpha strategy is inherently high risk, right? You have 10 highly valued, high momentum stocks, right? So what would happen, Mr. Ram, is that in most of the markets, the strategy, in whenever the markets are doing well, you will see good numbers coming out of the strategy, right? But when the correction happens, you might see a sharper correction. So I'll give you an example. A couple of months ago, when the small cap market corrected by 3%, alpha strategy corrected by 5%, right? Now, if you understand that risk, right, if you are aware of the risk that small caps have, you will not be worried, right? So most of the investors who are aware, this was doing really well because of this, and it's correcting also because of its exposure to small number of small caps, they would be okay. But if you haven't seen that risk before, then you might get worried, right? If you allocate it to alpha, you might have called me and said, "You corrected so much. Why did this happen?" Right? So if you have to understand what the risk you are taking, and then only you allocate to this strategy, is what I would say. And see, for
Right.
a senior citizen, I think the portfolio that we have created for Mr. Ram is extremely secure. So if you want to add a small allocation to the small case like you've been planning, then you can experiment, but you have to understand that risk.
Absolutely. Another question from Venkat. He's asking, would you be able to quantify the cloud computing that you use? Asking just to understand how complex your models are.
Quantify the cloud computing that we use. See, yeah, so we do use a fair bit of data. We use cloud servers. We recently, I'm sure everybody is aware, or is not aware, but we got selected in the Google AI Accelerator program, with which we are getting access to a number of more exciting tools, which we are just pumped about, right? So we are going to experiment a lot on their cloud setup and in the infra and the tools that they provide. So yeah, so I think we do use a fair bit of computing power. There are a couple of massive servers that are churning the research all the time, and we have these huge data sets. So that is there.
Right, right. An interesting question from Subha Reddy. They are asking that with other fund managers, I have seen only loss booking in, the alpha strategies or portfolios, but no profit booking so far. What happens in your strategy?
So alpha strategy that we have is in fact a momentum based strategy, right? And you would have seen that we have in fact churned a little bit in alpha, right? We send a weekly rebalance, and there is a churn that happens regularly. But I don't think we have booked a lot of losses, right? We might have booked a few stocks in loss, but majority, I think I would say, quite a few of these stocks have ended up at a profit. What might happen is, see, when does a momentum stock stop being momentum stocks? Momentum means that the trend has been picking up, right? And then what happens is that the stock overshoots the value that it might have, and then people realize, okay,
Hmm.
now it should come back to its valuation, right? And that is when there is a correction. So we might have participated in the run, and we might have sold it after a little bit of price correction. But booking it at a loss would be a very bad strategy, right? Booking all my stocks at a loss, then
Yes,
why would it give returns?
yes, absolutely. Um, Perfect. One question from Reno. He's asking on the custody side, are there any other options beside Nuama?
So we do in fact have Orbis as a custodian. But to be very honest with you guys, I worked at Nuvama before, like with Edelweiss before, and we're getting very amazing support. Me and Siddharth, right? We talk to them all the time, and we are having a great experience with them, and I'm sure our clients are also having a good experience with them. But we do have an option of Orbis. We're getting reached out by a few other custodians, and we're exploring all that. But I think the current setup is extremely reliable, right?
Yes, yes, absolutely. Uh, so, most of our PMS questions are, more or less answered, right?
Mm-hmm.
Probably one last question, and then we can, sort of go to some small case questions that are popping up as well. Just
Yeah, yeah.
5-10 minutes on that side, right? Uh, so say for example, if somebody invests in our small case and wants to invest in the PMS as well, right? So are there any special benefits for such a user who's already a part of our small case and wants to move to PMS now?
No, you come and talk to us and we'll figure it out, right? So I think in the beginning, a lot of I think many of our small case investors who had been exploring PMS or who do PMS, they did
Hmm.
in fact come and reach out to us, and we want to just strengthen our relationship. That is, I think, the basis of what we are doing with our customers. So we'll figure out what we can do best once you reach out to us. And before we move on to small case questions, let's quickly go over how to get started on the PMS side. If somebody is interested, you guys can go to the portfolio management service page on our website, and put in your interest, right? Your phone and email number, and then you will get a link to book a call with us, right? We typically
Hmm.
talk to people. If you don't want to do that, if you just want to get started, there's a form there where you can just fill in your details and get started as well. Our team does the onboarding digitally, right? So we just ask you for some KYC information, and within a couple of days, the account gets opened in a purely digital fashion. And if you just want to not go through all that and just reach out to us, you can just email us at pms.sales@rightresearch.in. So what I will do is that I will also put down that email here, right? Just in case somebody wants to reach out there, right? And Siddharth and I love getting on these calls and talking to people and explaining to them, how things work and what to expect, right?
Yes. Yes. Just before we wrap up the PMS questions, there's one interesting question from our existing PMS investor, Mr. Aishwarya. He's asking if there is loss booking in a short term, will you book equivalent short term profit to take tax benefit?
No, no, I don't think. I mean, we would do that towards the end of the year, right? We would do tax optimization towards the end of the year, but most of the year we are not, extremely focused on that aspect.
Right, right. Perfect. So Aman has a question. He's asking, is there any data to suggest that momentum is shifting towards large caps? And what is the AUM growth in the small case vertical right now?
So if you look at the momentum shifting towards large caps, I mean there is a little bit of a signal out there, right? So if you look at the sector performances, right, or if you look at the broad market performances across India, across the various portfolios, I mean various indices, you would see that large caps did better for a while. Right now, again, small caps have taken over, right? Small and mid caps have done better than the market in the large caps in the last week. But in a monthly basis, if you see, Nifty is doing better than small caps in the last 1 month, and mid caps are doing better than the Nifty, right? So
Right.
there is a little bit of a shift that's happening. And I think, like you said, again and again, we get asked this question, what are you doing in the run up to elections? I think we are maintaining a healthy mix of large and small caps, and that's what we're doing. So I think large caps might get a little bit of focus, but the growth there is a little slower. So mid and small caps, bring in that growth.
Right. Mr. Siddharth Suri, who's an existing PMS investor, has also invested in our small cases, right? He has a
Mhm.
question that my wife's portfolio is in right factor small case. I feel I have exposure to 40 stocks, which is over diversified. How do I concentrate my portfolio?
To concentrate your portfolio, you might have a couple of small cases, right? If I'm not wrong. So instead of that, why not go with only a couple, only one or two of them, right? I wouldn't say, and we talk to people like, some of the people who come and talk to us, they have eight such portfolios or 10 such portfolios. I don't think that's the best way to approach it. Try to keep, you are paying more than what you would pay a PMS, who might end up doing better for you with a smaller size of
Right.
portfolio. So in that case, you why not drill down with a smaller set of strategies to invest into, right?
Sure. Sure. Yes. So I think just two, three more questions on the small case side, which are very general questions, right? So Mr. Swaroop is asking, I have an amount of about 10 lakh rupees. As per current market conditions, shall I invest in lump sum or shall I do a 1 lakh SIP across 10 months? So it's largely, should people invest in lump sum right now or should they prefer the SIP way?
See, like I said, that we do expect the market to be good, but there is risk that is still out there, right? In the short term, I think if you look at the technical, some of the technical analysts, what they're expecting is that there could be slight correction from here, and then the rally continues, right? So with that in mind, you could do an SIP, but if you're doing an SIP, then you would be fully invested after 10 months, and you would miss out a little bit on the rally. So I would say that the lump sum could be a good option, but SIP could be a prudent option as well, right? So that is something that
Sure.
you have to choose based on your risk profile.
Sure. What is the maximum amount to invest in any small case, whether it's Alpha or New India? Is there a maximum amount?
Maximum, see, what we typically tell people, that maximum that you're putting into a small case, don't go beyond, let's say, a 20 lakh, because beyond that, you would end up getting a big impact cause. So that is what we typically sort of tell people.
Right. Perfect. Uh, is the rebalancing in small case strictly on a monthly basis? And what do we do, in case of if there are unexpected situations during the month, which might lead to a market crash?
If there are unexpected situation during the month, so we will trigger a rebalance, right? It's not like we are not going to do that. See, definitely, our small cases, they follow a schedule so that it is favorable for the customers, right? That they get it on a regular date, and they can follow along. They can know when to allocate capital as we near the rebalancing date and all that, right? Because here I cannot control your portfolio, right? So you have to take that decision. So we make it convenient for people by sending the rebalance on a specific date. But if a scenario comes in the middle of the month, so you would have seen, I don't know, I think a very small percentage of people might have been with us during 2020 crash, but we did trigger a rebalance whenever we saw the risk, right? So we do that even during the Adani situation, which happened before the big one. We did rebalance in the middle of the month as well, right? So all that we do step in the middle of the month as well. But what happens with small cases, that the rebalance does not if I give you a rebalance, it will only come to you tomorrow, right? There's no way for me to send you the rebalance on the same day, which is something that we work with, right?
Right. So I think we've answered all the questions that were popping up from the people who are watching the session, right? Just one last question, and then we can wrap this up, right? Uh, so few people are asking, is there any way to roll the small case into a PMS, and why just 50 lakhs for PMS? Is there something lower that might happen for PMS and things like
Uh,
that?
yeah, so see, PMS is it's SEBI's rule, right? SEBI says that for us to be able to manage money, the investor has to start with 50 lakh, and we can't do anything about it. In fact, we have a custodian, right? We have a custodian who manages the allocations at the back end, right? So the custodian does not give me access to any account which does not have more than 50 lakh, right? It doesn't get activated for us as a PMS, right? So that is something which is strictly in the rules, so we can't do anything about it. When talking about if you can roll it over to PMS, yes, in fact, you can upgrade to the PMS strategy, and you can reach out to us, let us know. You can in fact move your stocks from your existing demat to the PMS. If you are interested, you just have to to your broker, you have to get a DIS slip, sign it. There's a digital process also which you can follow, and with that the stocks come into you can be transferred between your demat without any cost, right? And within a small span of time, so that is also possible.
Yes. So I think we've taken all the questions up. Perfect.
Perfect. Awesome. Amazing. Thanks a lot, everyone, for coming in on the Sunday. It was amazing talking to you guys. If you guys want to see me again, I'm going to be talking at the Investing 2020 Summit at 3 p.m. talking about a particular stock. And great having everybody join in on a Sunday. And I hope you guys had a good overview of the PMS. You are excited about what's happening in the market, and I hope everybody has a good weekend and a great week ahead.
Absolutely. Thank you. Thank you, everybody. And thank you, Sonam, for the